Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you Monday, June the 29th, the year's 2020. Let's talk trading. Trade slow. A lot of times people overtrade. They trade too much. They're too fast to jump in trades. They're too fast to jump out of trades. They just basically need to slow down. But I want you to remember one thing, fellow traders, and that is these videos are for educational purposes only. Your results may differ from mine. Trading is extremely risky. You can lose all of your money. If you need trading, investment, or financial advice, seek the advice of an accredited financial professional. And I've got Walmart on the line. Walmart, have you been trading slow today?
Yeah, I have. Today I've only taken 4 trades, and I'm actually up 20 pips for the day. But you and I had discussed last week at some point in time that, hey, we're probably taking too many trades. We're over trading a little bit. It's gotten us into trouble. Luckily, we've been able to work our ways out of some of those things. But, yeah, we need to slow it down a little bit sometimes. And it's important to slow it down because if you're sitting there and you're not taking as many trades, gives you the time to look at the charts, see what the charts are doing, see how price is moving. And by doing that, you have an indication of what's actually going in it. And just by slowing down that way, what'll happen is you'll take the better trades.
Yeah, I know, because I had 15 trades on Friday. And I think out of them, I had 4 winners to make up all the losses. And it was one of the other things was I analyzed how many times I got in a trade and it turned against me as opposed to going my way. And so like today I got in a trade. You know, of course you're going to get a little wiggle of 1 or 2 pips. I don't really call that going against me that much. And then it, went in my favor, and I think I got 8 pips or something off of it. But it's just, that's the thing. You trade slow.
Yeah, and it's like today like I said, I've got 4 trades today. I've been trading now for roughly about 5.5 hours. So that's less than 1 trade an hour even. And it's just, I'll tell you what, the day's been a whole lot more pleasant because I don't feel like a ping pong ball going from trade to trade to trade. And sure, yeah, when you do that, sometimes you can make a tremendous amount of pips, but you also set yourself up for the possibility of taking a big, huge loss as well.
Because you hit your goal, and I think I was teasing you after, was it 1 or 2 trades, and say, hey, you should be done for the day.
Yeah, I was lucky today where, I hit my goal on the very first trade, and I should have been done, but, I said, you know what, I'm going to try to get some more pips, but I am going to trade slow. I'm just going to go, low and slow, just sit there, watch the market, watch what it's doing, look for those really good setups, pay attention to how the market's moving around those setups, and then only take the trades that make sense. And, and also by doing that, when you get into the trade, I think what happens is because you're not overworked, because there is something about that. Your brain can go and get tired. If you're constantly in trades, your brain can get tired. And by doing that, I'm going into a trade, and let's say it does run against me. I can think at the maximum capacity that my brain is able to do, and I can make smart decisions. Do I get out of this trade? Do I stay in this trade? How do I go? I don't have a situation of I jump out of the trade because of fear. I don't go and stay in a trade because of missing out. I'm able to make correct decisions based on my trading plan.
Yeah, no matter what. Of course, you're not going to risk any more than you're willing to lose per trade. So in your case, you made your goal and you dropped your lot size. So if something went against you, it didn't hurt you.
Right. I made the 10 pips that I want to make in a day, and then I dropped what I was risking to a quarter of, actually less than a quarter, but basically a quarter of what I would normally risk. So I look at the other 10 pips. Yeah, I only made a quarter of what I normally would. So that would be the equivalent of maybe 2.5, 3 pips. But hey, that's 2.5, 3 pips in my pocket.
Exactly. And like you said, you don't have any of the brain management fears or regrets. Because it was funny because there was that one trade today. It's like, yeah, if we had both stuck in, we'd be up 30-some pips.
Right. But, I actually mentioned this to you, earlier today, and that was that I didn't feel any regret because I look at it, it's like I went into the trade, I had time to think about the trade, I had made an exit plan out of that trade. So what's there to regret if you did exactly what you're going to go and do? Because that's what I set out to accomplish. That was my mission, to go and get these 10 pips, or to go and get these 5 pips, whatever it may be. And you get in, you get you strike what you're supposed to strike, and get out. And so, yeah, on that, it was actually a 5 pip trade where I picked up 5. If I would have stayed in there, the thing, I could have been up, 30 pips, 50 pips, something crazy like that if I would have stayed in the trade the entire time. But that wasn't my plan. And so, that's okay. So I don't regret that. I know other folks will regret that. But me personally, I don't regret that. So you got to know, I say this all the time, you got to know yourself. Know thyself, And, but the thing is, I was able to do that in a sane way as well because, again, slowed it down, pay attention to what's going on, see what's happening. Okay, I've met my goal for this trade. I don't know if it's going to go more. It might not. Get out, take your pips off the table.
Yeah, because I think one of the trades where we traded right at the 2300 level. I'm showing it on the chart now, and we were short, and I think we each took about, was it 5 pips or something? I can't remember exactly, but
yeah.
And I had called it out. I said, this sucker's going to go down to 90, and then it's like, then I think I got back in a trade. I said it's going down to 80. And you called it out. It was going to probably go down to 30-something.
Yeah, but you don't know it, And it made an attempt. It got down to 50, I think. It never made it down to the 30. But that's the thing about having a plan, okay? I thought it was going to go down to 30 because after you cleared that 60 level, it's a free fall from there. So, but for whatever reason, that 50 line held strong. Okay, that's trading. I don't know exactly what it's going to do. My bias was in that direction that's what it was going to do. I mean, there was good news that came out, good fundamental news that helped my bias a little bit. I know, Tiro, you don't go and look at the fundamental news, but I do a little bit. It sets my bias a little bit. Good, bad, or indifferent. It does that. And so I had a little bit of bias. But what's my trading plan? My trading plan says, when I see the market going against what I think it's going to do, my bias needs to change. And if I've slowed down, I have time to think through that process. I have time to go and slow down. As the expression goes, I get to slow my roll. But if I don't do that, if I'm just ping-ponging all over the place, I may get out way too late. Now, instead of being up 5 pips, I could have been, down 20 pips or more.
Yeah.
And you can't do that.
Yeah, so like I'm showing them on the chart the daily for the pound dollar, and you see right here at this level, 2250 level, it's in these 2 wick zones of these 2 inside bars that happened back on May 27th and May 28th, and then you can see price, reversed out of those wick zones, and it's coming back up right now. So that's one of the things when you're not focused, you're down on H1 or M1 and you're battling the trade, you don't have time to sit back and look at these other time frames. Now, yes, price is the same on all charts, but you want to look and see where did price reverse at what level, because you could scrunch the chart if you're on M1, but maybe, and you don't even see that level. And here on the M5, you don't even, whoops, that switched positions, or so, and even here at H1 is when you first start to see it. So you'd have had to make some switches. But normally, this is what I'm looking at. I don't see what's over here. But when when I'm not over trading and not fighting a trade, fighting a loss or hoping for it to come back, because that's really what you're doing. If you're in a loss, you're hoping. Because there's nothing you can do to make it go your way. So you just hope the market goes your way. And so like this hour, very simple trade. Like I've been telling people watching the videos this month, we're going to take H1 breakouts to the north and see there's a long at, say, call it 2279. Well, you're now 12, 13 pips above that level. It's a no fuss, no muss trade. and if you break it down the M5 to see was there any wiggle, maybe if you took the first break, you took a little heat, maybe you waited for the second, you took a little heat, and then on the third break, sometimes 3 is a charm, but you don't know. So I know Walmall, he doesn't like taking the first break. Me, sometimes I just take the first break.
Yeah, I always look at it as, if you can go into a fight, let somebody else get bloodied up first, then you take the break. Then you go and get into the fight at that point in time. What that does, though, for me, what helps me in that situation is what it does is, one, I don't have to sit through as much pain. I don't have as much pain management. And secondarily, it forces me to slow down, too. It forces me to say, let's go and see what this does.
Yeah, because that was almost a 10 pip. It's like a 9 pip reversal there.
Right. Exactly. That would have been hard to go stomach, wouldn't it?
Yeah. Well, that's why they say the second rat gets the cheese, right?
Sometimes, and you got all those lovely expressions. The early bird gets the worm, second rat gets the cheese. But that's all. But the thing is, again, that a lot of that's hindsight and stuff. But the reality is, I know a lot of times that the market will go break a particular line, fall back off of it, consolidate maybe a little bit, and then break it a second time. I look at it this way: if I miss a trade, that's okay. I can miss a trade. I don't need to go and take every trade to go and make my 10 pips. You think about today. What is the range today? 138 pips on my chart. Okay, I'm only looking to take 10 out of those 138 pips. Okay, I don't need to take every single trade to get 10 pips. And depending on what you go put on a trade, you can do very well just grabbing 10 pips. So I don't need to take that very first trade. So I'll just let it go and I'll just watch. And if if it goes and blows up 20 pips past there or 30 pips past that, it's like, oh well, that's trading. I missed that opportunity, but did I really miss the opportunity? If it wasn't my trade, if my trading plan says wait to the second opportunity, no, it's not my trade. I'll just wait for the next one because, every hour, if I'm trading H1 breakouts, every hour there's a new opportunity that comes along. There's a new opportunity where I may break the top or may break the bottom. So, okay, let's go and wait for that to come along.
And you can see right here on the H1, you have a bear candle followed by a bull candle. And then, so that's a turn right there. Price is turned. It was going down. Now it's going up. You see, you enter on the break here, turn trade. Or you could also consider that a rat reversal. Bull or bear candle down, bear candle up. You take the break of the high of the bull candle here. I don't have red, green, but, I got black, white. But, that red, green here. Take that break. Once again, pips available for you to take. And it's that simple. There's nothing about this screen that is difficult. Yeah, I've got some multimeters over here. I mean, I can see the candle color, whether or not price is above or below the previous midpoint. Is it in the wick zone or out of the wick zone? Is there an inside bar trade possible? Is it making higher highs or higher lows? Or is it making higher highs or lower lows, actually? And, I can just look over there real quickly. I don't have to look at each one. I can just get an overall view in the range. I can see the range for the day and what percentile. We're at 138 pips, 62 percentile, meaning 60 out of the last 100 days, 62 of those days had a range less than 138. For the hourly, we're at 20 pips, 56 percentile. Meaning out of the last 100 hours, 56 hours had a range less than that. So the higher this number, less likely the higher the percentile, the less likely the range is going to keep going up because it has to stop sometime.
Right. And depending on where you are in terms of time for the day or time for the hour, that'll give you a little bit of a clue to say, here we only got 20 minutes left in this hour.
Well, speaking of time, we've only got 30 seconds left in this video. So, fellow traders, I hope that helps. So just remember, trade slow because it's not what you trade, it's how you trade it. So go out there and drain the banks.